All right, folks. It's interesting because the more I look into few things that are going to be shaping this current year for the stock market, it is pretty interesting to look at how it's going to impact AMC. And that's why I want to share with you in this video why this year it's much more different and has much more greater potential, greater chances, higher chances at the the short squeeze in AMC stock happening rather than what happened in 2021. All right, so let's get into it right now. First off, if you look at the share, who went to $72 a share, and right now it's sitting at $15 a share, and pretty much lost 76% of its value based on pretty much no negative catalyst happening behind the scenes. Nothing. Absolutely nothing. It tells you that this is not only due for a bounce when you look at the technicals and the mechanics of the stock market, but more important, when you start digging deeper, let's just look at few things that we didn't have back in 2021 and are gonna shape the landscape of 2022 when it comes to the stock market. And these things are directly linked and tied to AMC short squeeze. First off, let's start with the most obvious. Betting against GameStop stock ended terribly bad for Melvin Capital. Here's why hedge fund management picked the wrong stock to bet against in 2021. GameStop, it's literally the same stock when it comes to the share price action as AMC. That's why I'm taking on Melvin Capital, because they were short GameStop mainly, but I'm pretty sure they were also short AMC. And because they bet against the wrong stock, that's why the guy's now losing and raising pretty much a new fund. And he was supposed to be a genius trader on Wall Street, according to his own words. In January itself, he lost $7 billion. How can you lose $7 billion in a single month in your hedge fund? Well, if you are overextended, if you are over margin, if you have too much debt that you went into in order to win your bets and that didn't work, well, you can lose $7 billion in a month. Only in a month. But more importantly, he wants to now raise money for a new portfolio. This is not new news. We already knew this, right? But I'm just lining up some of these stocks, some of these stuff, and you can see exactly how it will work out for 2022 to potentially being the year for the short squeeze to happen. So the guy is now going long. He's not short selling anymore. Why? Because he got burned. And because he did, he's now going long, meaning I will only buy stocks. I will not bet that they will go down because it's a risky business, even for a genius trader on Wall Street. Something else. Because it's definitely not the year to actually go short sell. You know what? Because another thing that was happening in 2021, and everybody was saying, but who is enforcing the rules? We had the DTCC, we have the FTCC, we have so many rules that came into the market in order to address what was happening here with situations like AMC and GameStop. But nobody was really enforcing the rules, because the truth of the matter is the stock is still down more than 80% of the highs of June 2021. But here is exactly what is changing this year. Listen.
And that is payment for order flow, something that you've come out against. Last August, you said you were considering actually banning it altogether. Where does that regulation stand at this point? Do you still think that's possible to ban altogether, or is it more likely we'll have full disclosure?
Well, again, what we're trying to do within our remit is help investors get a better deal on one side and companies raising money on the other side a better deal, and drive greater transparency and efficiency in the middle of the market. So in the equity markets right now, if you place a market order, a retail market order, 95% do not go to the lit exchanges, do not go to NASDAQ or New York Stock Exchange, they go to wholesalers. And they don't have order by order competition. And part of that is because of what you just said, payment for order flow, which is, yes, it's banned in the UK and Canada and Australia. And the European Union, through something called ESMA, is looking at that right now. And so I think it's natural that we look to say, how do we drive greater competition and efficiency in this market? And use the tools that Congress have given us.
But are you keeping open the possibility, the option at least, of banning it altogether? And if so, when will you make a decision whether you'll do that or not?
Well, it would be a decision for the 5-member commission. We would put it out to notice and comment so the public gets to weigh in. We benefit from the public's view, from the investor side, the issuer side, to basically a lot of our market right now is dark. It's not in the lit markets, David. It's dark and going to wholesalers and how we get more transparency and competition in the market. So each feature is on the table, whether it's something called the minimum increment or tick size or the national best bid, best offer, and how the order routing works. And yes, that includes not just payment for order flow, but possibly what's called exchange rebates. So it all fits together, and we haven't served up a recommendation to the commission yet. And the commission, if they supported it, would put it out to public comment.
Yeah,
I'm going to stop here because I know you can feel free to actually watch the whole video, but pretty much what the guy is saying, and this is the chairman of the SEC, is saying, well, we have a main issue. And that main issue is when you and I, retail investors, are sending orders in the market, they barely go where they're supposed to go in order for the share price to be transformed, to translate and reflect that we are buying the stock. Because don't get it wrong, AMC, it is still getting a lot more bought than it's being sold. The reason why the share price is still tanking, it's because of dark pools through payment for order flow. And this is on top of, the dark pools. But pretty much the guy is saying that's not fair, and that's not what we need to have in order for markets to work as they're supposed to work. And because of that, we are either looking at banning payment for order flow in order to also align logically with what the other exchanges, the other market, the other capital markets around the world are doing. Canada, Australia, EMEA, Europe, London, they are not allowing payment for order flow to be used. Why? Because it's detrimental to market efficiency. Now, on top of that, you have the DOJ working in order to actually put some evidence and put a hammer into those short sellers working in order to, they're working collusion, allegedly. They're working collusion in order to do what we've seen here in AMC. How come people are still buying a stock in millions every single day and the share price somehow continue to tank? It's against the law of the demand and the offer. And that's why it's important for the SEC to start picking things. What was different last year is that, there were some rules, but the rules were not enforced. What we're talking about here, it's actually an enforcement. We are forcing the short sellers. We are forcing some type of companies that are, since now, always try to find their way out of similar situations, but we are forcing them now to actually make sure through reporting on a daily basis, but also preventing them from using payment for order flow and shading the light around the dark pools where a lot of these shenanigans are taking place. So if we don't have any more dark pool, if we don't have payment for order flow, if we have less people short selling AMC and GameStop because it's a dangerous business, it's a risky bet to place, what else do we have that we didn't have in 2022, or we had, but it's just an addition? We still have institutions, not the traders, not the Bank of America, not the JP Morgan. No, I'm talking about Oregon Public Employees Retirement Fund. These are the guys that are not gambling with money. This is a retirement fund, for God's sake. So in order to place a $4 million bet in AMC with money coming from retirement fund, that's not a bet to me. That's an investment. All right. That's an investment. So we still have institutions that are still buying this stock, not for the lending, benefits they get out of it. But on top of that, now that you look at the main theme of 2022, inflation. Inflation is going to be the main problem that the Federal Reserve and a bunch of other investors in the market are trying to address or use in order to continue to make money, because it's not going to be as good as 2021. All right. And nobody wants it to be as bad as 2020. So the Federal Reserve, because of inflation, everything is just going all to the roof. Groceries, rent, houses, whatever. So the Federal Reserve is saying we will have to increase interest rates. Now, Bank of America, one of the top banks in the US, is now expecting 7 rate hikes this year. 7 rate hikes. The market is around 4. But Bank of America and along other banks are now expecting it to go all the way to between 6 and 8. That's pretty much one single month. One single month, even if it's 0.25%. Folks, with higher interest rates, it means any type of debt you have is going to cost you a lot more to service. Meaning, if you were just paying 0, because that was the case in 2021 and 2020, it was 0% cost in order for you to go in debt. Now it's going to cost 7, 8 times more than that. So if you went out of your way in order to be billions of synthetics and fake shares into stocks like AMC, in order for it to go from, to kind of sweep the bill underneath the rock, no, it's not going to be possible. It's not going to be possible simply because either the weight of that debt is going to dump you to the floor and you will be forced to close and pay that bill. By doing so, you're actually buying shares of AMC. But because there are so many synthetic shares out there and the retail investors own majority of the real shares, that's what we decide at which price we want you to get our attendees, to get those shares. And that's why the share price target on AMC is so higher than it makes sense that a lot of people are actually going to be making life-changing money here. So if I add everything up, if everything is being kind of resumed, all right, money is going to be a lot more expensive, meaning it's not going to be sustainable for the short sellers to continue to maintain those short selling positions, which we count by, actually billions of synthetic shares and naked shorts, etc., etc. If the the SEC and other agencies are actually looking at making your life as hedge funds a lot more difficult in 2022, well, just those 3 is going to be a lot more difficult. It's going to be a lot more easier to make money into AMC because this is going to actually go to the moon. It's going to skyrocket once everything starts settling. And finally, in 2021, it was kind of early enough because the SEC doesn't have enough resources to do the work they're supposed to do, all right? And we're going through a system. That's why I said this in the early 2021, that the hedge funds made pissed a lot of people. Powerful people that somehow, at some time, they are going to put, they're going to hit the table and say, you know what, enough is enough. We need to address this thing. Otherwise, we're going to the wall. And that's precisely what is slowly and gradually being implemented. So based on this, there are higher chances that 2022 might actually be the year of the squeeze. But again, because nobody knows exactly how until the future, it's just my personal prediction, but I can be wrong. But I also can be right. We never know. Only time will tell. I see you next one.